Hey everyone, welcome back to Corporate Decoder, the place where we translate corporate jargon into plain English and uncover the real stories behind the filings. Today we're diving into an amendment for Kodiak AI Incorporated's recent report. It seems like they've got some financial updates to share and we'll be digging into what those actually mean. Before we dive in, if you appreciate getting straight insights from these dense corporate documents, make sure you're subscribed to the channel. We also have a fantastic community on Discord linked in the description below where we break down these filings even further. So Kodiak AI Incorporated, you might know them from their recent business combination, is filing what is called an amendment to an earlier report. Think of it like correcting or adding to a previous statement. The original report was about their business combination, which is essentially when two companies merge or one buys the other. This amendment specifically focuses on updating their financial information. They're adding more details about how things look financially after that merger, especially concerning things like preferred stock and warrants, which are basically special types of stock options or rights. The company Kodiak AI Incorporated originally reported on the 30th of September 2025 that they had completed their business combination with Ares Acquisition Corporation 2. This new filing, this amendment, is really about providing updated, unaudited pro forma condensed combined financial information. That is a mouthful, right? Let's break it down. Unaudited means these numbers haven't been officially checked and signed off by an independent auditor yet, which is common for these types of immediate post-merger reports. Pro forma means these are hypothetical financial statements showing what the combined company would have looked like if the merger had happened at an earlier date. Condensed combined simply means they are presenting the combined financials in a summarized way. So, they are showing you what their finances look like now, as if the merger was already in place for the periods they are reporting. The big reason for this amendment is to update valuations, specifically related to preferred stock and certain types of warrants. These are like complex financial instruments that can affect how much the company is worth and how its profits are divided. When there are changes in how these are valued, especially right after a merger, companies need to report that to investors. It is like adjusting the estimated worth of different pieces of a puzzle after you've put them together. The dates we read looking at for these updated financials are for the 6 months ended the 30th of June 2025 and for the entire year of 2024. This gives investors a picture of the company's financial health and performance over these recent periods, adjusted for the merger. Now, let's get to the juicy part, the financial information itself. While the filing doesn't contain massive tables here in the text, it points us to Exhibit 99.1, which holds the detailed pro forma financial information. This means we have to look at that exhibit to get the specific numbers. Typically, in a pro forma filing like this, we be looking for key figures that show the combined entity's revenue, expenses, and profitability. The fact that they are amending this means there were some revisions to the initial calculations. This could be due to new information about the value of the shares issued in the merger or changes in the expected costs or benefits. For investors, this is crucial because it directly impacts their understanding of the company's true financial standing after the combination. It is about understanding the real economic impact of merging these entities. The specific focus on preferred stock and warrants suggests that these instruments play a significant role in the company's capital structure and could influence things like earnings per share for common stockholders. Looking at the securities registered for Kodiak AI Incorporated, we see they have common stock trading under the symbol KDK on the Nasdaq Stock Market LLC. They also have redeemable warrants KDKRW also on Nasdaq. Warrants are essentially options to buy stock at a specific price, and redeemable ones can be bought back by the company. The fact that both are traded publicly means investors can buy and sell them, making the valuation of these instruments very important. Any changes in valuation, as the company is reporting here, can directly affect the market price of these securities. Kodiak AI Incorporated is identifying itself as an emerging growth company. This status comes with certain regulatory benefits, particularly around how quickly they have to adopt new accounting standards. They've also indicated they have elected not to use the extended transition period for complying with new or revised financial accounting standards. This suggests they are aiming to be on par with newer accounting rules sooner rather than later, which could mean more transparent and up-to-date financial reporting from their perspective. Finally, this report is signed by Don Burnett, the Chief Executive Officer. This signifies the company's official acknowledgement and responsibility for the information provided. The date of this signature and filing is the 10th of October 2025, indicating a bit of a delay between the events reported and the formal amendment. Now, let's consider what this all means. This amendment isn't changing the fundamental event, which was the business combination. Instead, it is refining the financial picture of that combination. The fact that they are updating valuations for preferred stock and warrants indicates that these financial instruments are not trivial. They carry significant value and potential future impact on the company's financials. For investors, this is a positive sign that the company is being diligent in its financial reporting and is providing updated, more accurate information. It suggests that the initial valuation might have been preliminary, and these are the more refined numbers. We need to look at that Exhibit 99.1 to see the actual numbers, but the fact that they are amending for valuation updates on these complex securities tells us there is a layer of financial engineering at play. The key takeaway is that Kodiak AI Incorporated is being transparent about the evolving financial complexities following its merger. While emerging growth companies get some leeway on accounting standards, their election not to delay implies a commitment to current reporting practices. We do need to see the actual pro forma statements to assess their revenue trends, profitability, and any significant shifts in their financial position. But this amendment itself signals a proactive approach to financial disclosure. Alright, that is our breakdown of Kodiak AI Incorporated's latest filing amendment. What are your thoughts on why these financial instrument valuations might have changed and what that implies for the company? As future performance, drop your insights in the comments below. If you found this analysis valuable, hitting that like button would be awesome, and subscribing ensures you don't miss our future deep dives. And don't forget to join our growing Discord community. The link is in the description. Thanks for watching, and we see you on the next episode of Corporate Decoder.